Welcome to another episode of the Presale Pulse, where we talk about everything real estate in the Metro Vancouver area. I'm Ryan Lalonde. I'm joined by my co-host and partner, Suzana Goncalves, one of the smartest people in our space, also the voice of an angel.
I think we should set the bar a little lower.
Every time it's getting higher and higher and higher. I love it. I think where we need to start, though, is that the holidays are here.
Yes, finally. We're
mid-December, right? Special shout out to Canada Post right behind us, who's taking care of all that heavy package delivery. It's 10 a.m. I have my eggnog spice latte. Susan's on wine, I think. And we got an exciting show for you guys today that we're excited to jump into.
Yeah, today's going to be great. We, of course, are going to talk about some of the macroeconomic factors. We'll talk about the data that's driving the pre-sale side. As always, we'll talk about the resale data both in Greater Vancouver as well as Fraser Valley. And my favorite part is always the trending topics. So we've got a couple of good ones for this month as well. Looking forward to, I think, a pretty weighty episode today.
Well, let's obviously just do a quick recap on the pulse. So that is everything resale and pre-sale that's happening in Metro Vancouver. This is the last 30 days. And so this session is all about the month of November. It was another big month. I feel like that's been the common theme over the last 6, but we're really, really excited to share some great data with you guys. I think one of the biggest adjustments, though, that we're really excited to announce now is that in the past, because of some of the great feedback that we've had from our subscribers and from our viewers, there's been a hope that we could be able to try to get this down from the 15 to 18 minutes that these sessions have been into something that's a little bit more manageable. Suze, data is also a really big part of what we do. Do you want to touch on that a little bit?
And a quick shout out to our friends over at Urban Analytics, Michael, John, and their team there. They definitely help us out with some great data, and so thanks to them as always.
Suze, that's a really good point. There's so much great data shared in these sessions, and from our perspective, we'd love to dive deeper, but we're doing our very best to be short on time. And so our recommendation is that if you're interested in learning a little bit more detail about any one marketplace, or you're just looking for a trusted second opinion, our recommendation would be to check out the links below, and of course, reach out to us anytime. We're always keen to learn how we could help. So let's talk macroeconomic factors. These are those levers or those metrics that we're paying close attention to that we think have some impact across the wide marketplace. The first, obviously, transactions, 3,064 transactions in the month of November. This is strictly for Metro Vancouver. It's an incredible pace. It's up almost 25% from where we sat just a year ago. Now, it is 600 units lower than where we were in the month of October, but still a very strong showing this late in the season. BC unemployment, it's still at 7.1%, similar to where we were last month, and that beats the national average by about 1.5%. So British Columbia doing very, very well when it comes to our economy. Interest rates, these are remaining constant. Bonds sitting at around 0.5 point, but we have some variable rates now that are slipping right around that 1% threshold. That makes for some very affordable mortgages in the marketplace. Total cases of COVID, these are 38,000 cases in British Columbia. We're seeing our daily rate sitting around 650. That's obviously substantially up from where we were back in May and June. But it does feel like with some of the most recent restrictions that we're seeing announced provincially and federally, that our expectation is that trend line is going to come down dramatically. Stock market surging, hit over 30,000 points in the month of November for the first time ever. That's a big recovery from where we were back in February. And then, of course, taking a look at social gatherings and restrictions, those are going to remain in effect, or a lack thereof actually remaining in effect until January.
Yeah, and of course, Pfizer stock is on the way up as well.
It's nice to see that Canada finally announced its first vaccination as of today, which we're really excited. And I think we're all wondering just how fast can we begin to roll out these vaccines across the nation.
Let's turn our attention now to the pre-sale data. We had 13 projects released in November, just over 1,100 units. That's actually the second consecutive month where we've had over 1,000 units released into the market. And it's been a while since we've had that. So nice to see the activity continuing on. The other nice thing was that it was fairly evenly spread out. We had 7 projects in the Greater Vancouver area and the other in the Fraser Valley. So nice to see it consistent and quite spread out. Last month we saw the Fraser Valley take a little bit of a pause. They were clearly just refilling their pipe, getting ready. So nice to see that product released in the Valley again. We also saw a couple of concrete launches, most notably PCI's King George Hub. We'll talk in a minute about their sales absorptions, but overall, good activity across the board and very consistent.
I think what's also fantastic is that it's not just about launches these days. We're seeing tempo campaigns do very, very well. And I think that that's something that we're all really, really keen to see continue moving into 2021. Suze, let's talk pre-sale absorption. So as you just shared, 1,100 units came into the marketplace in the month of November. And our belief is that approximately 18% of those actually transacted. And so that's approximately 200 homes in the month of November from all the inventory that was actually released throughout that month. Now, that's not to say that a number of tempo programs or previous launches that were previously in the marketplace, of course, as those sell, that number is not included in our 18%. I think what's really interesting to note, though, is of those 200 transactions, approximately 50%, we believe, came from King George Hub, and the other 50% coming from townhouses scattered throughout the Metro Vancouver and Fraser Valley neighborhoods. A nice mix of investor and end users. We still believe that the majority of the marketplace is being driven by that end user that's looking for affordability, but nonetheless, very, very good sign to see that investor coming back into the marketplace in a big way.
So speaking of that investor market, we know that some of them found their way to PCI's King George Hub. King George Hub has 438 units. They've had a good, decent start to their program. Obviously a long way to go, but nice to see them get off to a good start, and we'll track that closely ongoing. In terms of townhome project, we saw Mason by Cressy and of course the Morrison in North Vancouver get released into the market and off to a good start there as well. And then of course a number of projects, as we mentioned, in the Fraser Valley. Horizon, Crofton, Station 48, Holden Row and Homestead, all releasing product into the Fraser Valley, mostly South Surrey and Langley. No surprise, we've been seeing that consistently for the past few months. So definitely some great projects that were released this past month.
You know, now seasonally, we see significantly less inventory find its way into the marketplace in the month of December. And that ties back more to some of the traditional changes that December endures, which is generally a very active holiday season. This month, we're forecasting one project to find its way in. That's a concrete tower coming out of Richmond, 232 homes called Park Residences. We don't have any slated wood frame or any slated townhouse communities that we're aware of that are coming to launch throughout the month of December, but of course we're going to keep a close eye on that. It does feel like there are a handful of projects that are scheduled for launch in Q1 of next year. These are concrete products that are slowly trying to find a way to kind of itch in, potentially doing some early prospecting, and it wouldn't surprise us if one or two of them maybe found a way to drop disclosure and just pick up on maybe some of the lack of launch inventory that's found its way in December.
Yeah, we're going to touch on that a little bit further in our trending topics section, but definitely interesting to watch the amount of inventory that can come to market very soon. Greater Vancouver resale stats, let's dive into that. We've had, again, another phenomenal month. Over 3,000 transactions in the Greater Vancouver area. That's the 5th consecutive month of transactions over that 3,000 watermark. So again, showing really strong activity and signs of that momentum continuing. Now the transactions did technically fall back just slightly, but as you just talked about, it's not uncommon for us to see that rollback happen in sort of November and December in particular. And we definitely saw it on the inventory side. So the inventory came down 10% this past month. The sales transactions, not quite that much, so demand is still outpacing supply right now, and we expect to see something similar happen in December. Even with the slight rollback in November, we're still well above the 10-year average mark, 24% above the 10-year average mark for the month of November. So again, that just goes to show you how strong this month is compared to many November months in the past. Overall, really strong month, and activity just continues to roll.
You know, I think that kind of moves nicely into the benchmark price. Right now, month over month, we actually saw a rollback, 0.1% decrease in HPI benchmark across the Lower Mainland. That is a very, very small amount. But when we think about November of 2019 to November of 2020, we're up just over 5.5%, which is a strong performance in that time frame. When you think about what happened through those months, right? When you think about the rollbacks and the massive change that COVID has caused, it's incredible that we still are coming out of 2020 with an appreciating value year. I think when we think about condos over that time frame, they're up about 3.5%. Single family is up 9.5%, and townhouses up 5.5%. And so much of this being driven on the backs of an end user. In some cases, they're flowing from west to east, and in other cases, they're making the transition that might have been on pause through some of the down months of 2018 and 2019. We're going to keep a really close eye, though, on trending price point. And our expectation is that when we look at inventory levels that we're going to touch on shortly, our belief is that we're going to see them continue to move upwards over the next 12 months.
The other thing that's worth mentioning, of course, is those numbers in terms of that 12-month price increase. The single family number at just over 9% starting to get a little bit high, but everything else within that sort of 3 to 5% mark, that feels perfectly kind of where we want to be. It's sustainable, and yet we're still seeing price escalation. And so we love to see that overall.
I think the real concern from our perspective actually is there's a handful of markets out there that it is not 9.5%, but it is closer to that 15 to 20%. We saw significant drops in 2019, and we've seen significant gains now in 2020. And so our hope is that we continue to find a more balanced marketplaces for some of those neighborhoods, so that those end users and so that some of the residents are able to find comfort in a more stable buyer's atmosphere.
And most of that activity is actually happening in the entry-level segments of the market as well, which also sort of explains why the price hasn't escalated more than it has, because so much of that activity is people sort of stretching into that next level, where it's that sort of entry-level segment into each product type. And so that sort of explains why the pricing has been fairly sustainable and consistent as well. So that leads nicely into our sales to listing ratio numbers. They've come back just slightly, but still very, very strong. Of course, anything over 20% consistently, that's when we'll start to see price escalation. So just shy of 28% in the single family market, just shy of 24% in the condo market, and of course our townhomes, which have been the strongest product type since COVID, just over 40% sales to listing ratio.
I think one thing that's important to note is that sales to listing ratio becomes a little bit less accurate in the month of December and in the months of January. And that's primarily because many listing agreements will actually expire moving into the December holiday months. And so with that, we'll see a fall off of supply over the next 30 days. And we'll begin to see that supply come back onto the market in the latter part of January and early February. And so as a result of that, we're going to see a significant adjustment in sales to listing ratios through that time frame. But again, paying very close attention to aggregate sales prices through that period as being one of the key indicators that will follow. And then of course, mortgage rates. We know that if mortgage rates stay low, affordability is high, we expect that price is going to continue to push upwards.
Let's dive into trending topics. This is my favorite part of our sort of monthly pre-sale pulse. I love the data, but I also definitely love the trending topics because, of course, it is timely and so relevant and essentially what everyone's talking about right now.
Can I also highlight that the one trending topic that you're covering today is actually the one that we've been looking forward to the most this year, probably?
Yeah, I think that's well said for sure. We've been hoping and praying and working diligently to find a vaccine, and we have one. Yes. This is obviously a game changer for literally everyone in the world, and so it can't really be overstated. We've seen the UK get their first vaccinations. We saw the very first vaccination in Toronto today, which is extremely exciting. 250,000 doses of the vaccine have landed in Canada. Just short of 34,000 of those are on their way to BC. So we're excited about the first dosage that can be administered here locally. This, obviously this is what we've been waiting for. The challenge now, of course, is just how they roll this out, how many more doses can we get, how quickly can we get them. So there's a lot of work ahead of us, of course, to make the sort of entire population safe. But this is an amazing first milestone step, one that we've all been desperately waiting for.
I think what's vital, though, even with a vaccine now in hand, finally being rolled out, from our perspective, nothing should change in terms of our behaviors, right? Right now, we should all stay very, very focused on doing our own part as best we can. Obviously, the holiday season is here. This is going to be top of mind for everybody in how to connect and how to spend time with loved ones. And I think most importantly is making sure that in most cases we are moving towards phone calls or moving towards those Zooms. We're staying away from family that we love so much. Just making sure that we're adhering to those distancing restrictions and keeping everybody safe. Also, really important for us to continue to do our best to support so many of those first responders that will be fighting very, very hard over the next 30 days through the holiday season, making sure that all of us are taken very well care of for anyone that does fall ill. So today's second trending topic, it has to be concrete inventory. There's no way we can not wrap up 2020 thinking about what's to come in 2021. And we know that so many marketplaces that have been on pause since, in some cases, the fall of 2018, have been holding the inventory close, waiting for that ideal time, making sure that investor and then also that neighborhood buyer, both of them are in the marketplace so that pre-sale tests can be achieved and that we can really get this density out of the ground to support housing locally. Now, I think when we're looking across the Lower Mainland right now, Coquitlam, Burnaby, Richmond, and Surrey have an incredible amount of inventory that our expectation is that most of it will come live in Q1 and Q2 of next year. And with that is going to be some incredible perspective around how much that investor and how much that local buyer is able to support current day prices and also keep up with the inventory levels that we think are going to be significantly higher than where they were in the latter part of 2020 and certainly, far above where they were in 2019 and latter parts of 2018.
Yeah, it's going to be interesting to watch just how deep our market is. We've been sort of testing it out in the last few months, and we're about to get a strong sense of just how deep that market is coming very, very soon. And I also think that, the question around, well, why would everyone release at the same time, or why is everyone sort of racing to get out there? And I think just that reminder around how long some of these developers have been holding on to some of this inventory. Most of them hung on to it during 2019. A lot of it, to your point, was the fall of 2018. We started to see all of this sort of hold back as well. So it's been, a good solid 18 months of sort of a lack of concrete supply into the market, and developers are wanting to get on with it. They have holding costs and other considerations, and I think now that we have a sense that the market is stronger than it was, I think everyone's excited about getting stuff back onto the market.
Also, I think really important to note that every project that has gone has found success. Like, that's just the reality of it, right? And I think so many of us were nervous about how deep that marketplace was all throughout 2020 because COVID has just thrown this wrench, and everyone wanted to make sure that they're being very, very conservative with their approach. But when you think about it, Richmond Center found success, SoCo, High Point, you think about Sentinel, you think about Format, every program for the most case that has pushed concrete into the marketplace has been rewarded. And I think that's because a lot of it is buyer demand. And then also the local resident really showing up and stepping into pre-sale transactions at a pace that wasn't necessarily similar to where it was before. We have the millennial that's slowly coming back into that marketplace. And really now, we felt like they were slowly itching in 2019. In the early part of 2020, that pace quickened. And now in the latter part of 2020, they're one of our key drivers. The Gen X is also falling close behind. And then finally, in the latter part of 2020, seeing the investor really step up in a big way.
And let's define success for a minute, because in our marketplace, in the past, we've been sort of spoiled or conditioned to believe that success simply means a sellout within 3 or 4 months. And the reality is that's not normal. That's not common. We had a time frame where that was true, but the reality is that was the exception, not the rule. Success really is around hitting that 30 to 50% sold mark. Relatively, so you kind of want to get 30% sold within the first couple of months. You want to be at 50 to 60% sold within the sort of 9-month time frame where we need to pull a building permit. And then, of course, you've got potentially, anywhere between 1 to 2 years to sell out the remaining inventory. That is what's normal. That is absolutely a success. And I think that's worth noting because success does not need to be a sellout within 4 months. That's not normal. And that's where we get, price escalation that's unsustainable and not healthy for the market.
Yeah, that's well said, and something that we want to keep a really close eye on throughout 2021. So, Suze, that's a wrap?
Yes, that's a wrap. 2020 in total.
Is that? Are we finally out of this thing?
I think so.
I feel like up on my screen, all I can see is Pfizer and just feel so thankful that 2020 very shortly will be in our rearview mirror, and we're excited about 2021.
Yeah, I think everyone is happy to get 2020 over with, on to bigger, better, and spending time with our loved ones and our families and friends again, maybe even traveling again. Wouldn't that be nice? That's a luxury we've long forgotten. And most importantly, we really hope everyone just has a really wonderful, happy holidays.
So with that being said, I think that this is a holiday wrap on our November version of the Presale Pulse. Looking forward to seeing you guys early next year. Again, though, if you have an opportunity, check out, give us a like below, give us a high five, or hit that subscription button. With that comes a lot of great data and a lot of great intel. Most importantly, you get access to the Newswire. This is our daily roundup of all the hottest trending topics throughout our space. You also have access to the Presale Pulse, which is a monthly subscription. And then, of course, unparalleled access to any of our upcoming project launches. We're really excited about this because when we think about 2021 and we look at our pipeline, there's some fantastic inventory that's going to find its way into the marketplace.